Kapil Shah, Technical Analyst, MK Global Financial Services. Kapil, good afternoon. Thank you for giving your time to ET Now. We'll start with your closing trades. What are the stock-specific recommendations that you have on your radar?
Yes, first of all, good afternoon to everyone. So, though there are many stocks that hasn't given us an opportunity overnight because they have open up in quite massive gap up not. So, I'm going through some sorts of a technical structure where the risk reward ratio is quite proper. So, one of the stock that I find quite appealing right now is the APL Apollo. The stock is trading near to the 1615 also level. So here I find it is a good buy opportunity because since 2020, that is the COVID low till date, stock has given an 8 to 9 corrections. Of course, there were lots of time-wise correction as well. But whenever this stock was coming down, it comes down by a 25% plus minus 2% from that particular range, and then it rebounds. And there are some sorts of technical structures as well. So APL Apollo, so 1615, we are recommending the buyer recommendation on this with a stop loss of with a stop loss at around 1570, and on the high side 1720 will be the upside potential that we are sensing in this. And another stock from the auto pack, from the banking space, that is BSC first. Here also, I'm finding the stock has came down drastically on the lower side, showing some sorts of reversal sign right now. So around a 70 level, that is a buy opportunity with a stop loss of 67.4, and on the higher side, 73.5 will be the upside potential.
Yeah, Apollo and IDFC First Bank looking good to couple on the charts. Aditya, before we come to you for your stock-specific ideas, let's quickly just shift focus and talk about the steel industry because the Commerce Ministry's arm, DGTR, has recommended final imposition of a safeguard duty on imports of certain flat steel products for a time frame of 3 years. The move comes in to protect domestic manufacturers from the sudden jump in the inbound shipments. And Prakash is joining us with all the details and the impact on the steel space. Prakash.
Yeah, big relief expected for domestic steel players as the safeguard duty on steel imports likely to be continued. A very significant development coming in. In fact, DGTR has made recommendations to the Finance Ministry based on its final investigation report, where it says that the safeguard duty should be levied for another 3 years, and that should be in a staggered manner. It should be levied at the rate of 12% in the first year, 11.5% in the second year, and 11% in the third year. A very significant development coming in. You were aware that the government had already imposed a 12% safeguard duty on steel imports for 200 days, which was a provisional duty, and now investigation has been completed. Final recommendations have been made based on this final investigation. This duty will be applicable on various countries such as China, Vietnam, and Nepal to protect the interest of domestic industry. This is very significant also in the context of US government's decision to impose 50% tariff on steel and aluminum imports. So there is a potential risk of further dumping in the country, and therefore these recommendations have been made to the Finance Ministry, and the Finance Ministry will have to take the final call on this proposal.
Absolutely. The Finance Ministry to decide the final steel duties. But Mayuresh, coming to you on this, government has planned to extend steel safeguard duty is what is coming in from the sources, and metal and steel sector is also on the focus radar. We also did see shine in the sector. But if we talk about the current development, the DGTR has recommended extending these duties on imports from China and Vietnam for 3 years, starting at 12% and tapering to 11% by year 3. How do you see the fundamentals, and particularly in particular for the steel sector?
No, so sentimentally positive, because I think any kind of an anti-dumping duty which comes through obviously creates a safeguarding impact, which is meant to be to protect domestic interests. And therefore, I think from a domestic perspective, the capex continues to be very, very strong from the government side. You're also seeing green shoots of private capex starting to come through. And that basically gives a premise to most of the steel producers to probably ensure that the volumes that they're making is at least sold off domestically to a large extent. But the bigger question lies in terms of pricing itself. And pricing is determined on the LME, which is a large part of the global demand-supply dynamics. Now, because of tariff impositions that are probably happening, what probably happens in China as a primary case, being one of the proponent manufacturers of both hot rolled and cold rolled steel, I think that becomes very, very pertinent as far as the pricing is concerned. Secondly, in terms of the demand perspective itself, how is demand expected to shape up? Whether it's North America, whether it's Europe, or any other economies in the world, is something to be probably looked at. And therefore, I think the entire perspective in terms of an operating leverage with pricing being extremely important might still remain a little bit subdued and soft, which might not give a complete element of pass-through as far as domestic sales are concerned, being still linked to international prices. Having said that, I think with input cost expected to remain a little benign, with expectations of more backward integration that a lot of firms are doing, a few of these domestic firms might continue enjoying the benefits because of the DGTR extension of anti-dumping that is probably expected to happen. So in my opinion, I think domestic focused players might probably report better numbers as far as the sector is concerned.
Okay, so that's the take on steel safeguard duty, sentimentally positive. But Aditya, let's come back to you. And I believe in your stock-specific recommendations, you also have a steel player.
Absolutely, Snehi. And a couple of buy recommendations. The first one is Grasim on my radar. Looks extremely bullish on the verge of a fresh breakout into an all-time high territory. A buyer at current levels, I would recommend to go long for a target of 3030 with a stop loss at 2760 on the downside. That's Grasim for you, the first stock recommendation. The second one is JSL. Clearly looks very strong to me on the chart setup, and as we were discussing as well, looks like there is some more room on the upside as far as metals and steels are concerned. So for a target of 790 on the upside, I'll be a buyer here with a stop loss at 721 on the downside.
Right, so that's Jindal Stainless, 790, the target 721 is the stop loss which you maintain, and 2.5-3% gains is what we see in the market today at 749 level. Two calls coming from Aditya Agrawal. The strategies are on your screen. Moving ahead, Chinese Foreign Minister will visit India this week to boost bilateral ties, and boundary talks will also be on the agenda. This visit comes ahead of PM Modi's visit to China for the SCO summit later this month. Sumita is here with all the details. Sumita, over to you.
Right, so Chinese Foreign Minister Wang Yi begins his India visit till the 20th. In fact, this is essentially aimed at boosting bilateral ties. There will be boundary talks on the agenda as well. India and China, remember, both countries are looking to manage tensions and promote collaboration. This visit becomes significant because it's coming in ahead of the Prime Minister Modi's visit to China for the SCO summit later this month, where the Prime Minister is all set to meet President Xi Jinping. This is the Prime Minister's first visit to China since 2020. After the Ladakh standoff. Remember, this is also coming in even as United States has imposed additional 25% tariffs. So, of course, there is an understanding, or there is an intention between both the countries to essentially look at boosting bilateral cooperation, whether politically or economically. Remember, because as far as China is also concerned, both the countries were locked as far as the trade deal between the two sides was concerned. They had triple-digit tariffs, and then after that, United States decided to provide relief for another 90 days. So what's really on the agenda as far as this high-profile visit is concerned? Well, External Affairs Minister Dr. S. Jaishankar will be holding a bilateral with Yi this evening, and then there are SR-level talks on China boundary question with NSA Ajit Doval tomorrow. There's a call on Prime Minister as well, which happens tomorrow evening. So a power-packed visit ahead of the Prime Minister's visit to China. Remember, just a couple of days back, Shi Feihong, the Chinese ambassador to India, when United States imposed elevated 25% tariffs on India, he said that you give the bully an inch and he will take a mile. So China largely has been maintaining that unilateral tariffs are not good for anyone, the host country and the country that imposes them.
Okay, well, this is also another meeting to be watching out for very closely, because on one side you have the Trump-Zelensky meeting that's going to happen today, and here you have this Chinese foreign minister visiting India, and that meeting with PM Modi is also going to be very, very crucial to watch out for. Mayuresh, we'll let you go on that note. Thanks once again for joining us and sharing your views with us. But as we slip into a very short break, solar module giant Vikram Solar is launching its 2,000 crore IPO tomorrow, which is 19th August, with a price band of 315 to 332 rupees per share. Investors can bid in lots of 45 shares, and the issue closes on the 21st of this month, with allotments expected on the 22nd. The offer includes fresh equity worth 1,500 crore and an OFS of 579 crore rupees, and JM Financial is the book-running lead manager. On that note, we'll slip into a very short break and keep the conversation going and keep tracking markets when we return.